Okay, well, first of all, Gino, thank you for the nice introduction earlier. I'll add a little bit to that here.
Please do.
Um, you guys have heard of the Blue Man Group, so I was officially a one-night star of the Blue Man Group in Las Vegas. I know I don't look like a blue man today,
Did you get paint on
but
yourself?
uh, short story is I had a lot of paint on me. It wasn't blue paint. They actually put a jumpsuit on me and took paint rollers and they rolled me. And then
Nice.
they wrapped rope around my ankles, flipped me upside down, and did body art against the wall.
Hmm. Okay. Haven't experienced that, but that's cool.
Not on my bucket list either, Jake.
Yeah, it was a good time. Moving to a more professional intro here. So I have been involved in about 877 units. That includes my single family as well as my short-term rental business and my multifamily business, which obviously consumes most of those units.
Mm-hmm.
Started in the single family space back in 2014, moved to multifamily in 2018 with a 20 unit. For those that don't know what an IRO is, that is independent real estate owned. So basically that means I bought my first multifamily just like I bought single family by opening my checkbook. And I've since moved into syndications, but that was the only way that I knew how back then. But it got the job done, and I had 100% of the profit, but I had 100% of all the stress and the capex and all the worries. So kind of changed my model a little bit. In 2019, I did my first syndication. That was the 60 unit that you mentioned, Gino. I've since sold that. So my first and second deals, we've already gone full cycle on. I've done 7 multifamily in total, raised about 6.3 million. And you can see I've got a few logos at the bottom here. 2022 has been a pretty busy year for starting businesses for me.
Oh, there you are. Now I see yellow paint. I see it now. You pointed me to the logos now, and I see it.
Yeah. So that was.
Did they shave your head for it, or did you have like a thing over your?
No, I had a motorcycle helmet on.
Nice. You got to be safe doing that stuff. I got you.
That is awesome. Tony, what led to all the activity in 2022? Was it joining the community, gearing yourself up, and really taking, personal development to the next level? Because I mean, doing those deals, getting clarity on them, coming to the buy right boot camps, understanding what your buy right criteria, knowing that you needed to sell that second deal, but you didn't want to do it, but then you got clarity on that. Did that give you the time to actually focus this year on a lot of the activity that's actually created a lot of success for you?
Yeah, I think so. I joined Jake and Gino back in August of 2021. I quit my job in September of 2021. And I think for me, it was let's just roll and go for this. And if I'm working without a net, it's okay. I'll make some mistakes, but I'm going to give it a shot. And as I got into it, I got to tell you, Bill Ham's conveyor belt concept, I didn't even realize it at first. It was just exciting to be in a multifamily and out there doing this full time and buying assets and jumping into deals. But what I didn't realize, it took me about 8 or 9 months to figure this out, is you stick those assets on your conveyor belt, and if you don't have a full-time job, there's a gap between those assets you put on the conveyor belt, and you still got to pay the bills.
Mm-hmm.
So that book you have behind you there, The Honeybee, I happen to be going to one of the boot camps. I read that book, and it dawned on me that what I was missing in between putting those assets on the conveyor belt was additional streams of income.
Mm.
And so that's where some of these other things came up. And the coaching business actually came up about mid-year.
That's awesome. Are we jumping into the deal? You have his next slide, the deal.
Yep. Well,
right.
The why Jake and Gino here, if you want to go there, but then we'll go into the deal.
Yeah, I mean, I can read these off. You need to think bigger.
Gino's like, you can say something nice about me any day of the week. I'll take it.
Well, I mean, take a look at it. He needed to think bigger. And that's the great thing about Tony. Tony had experience. He had done already 2 deals. He had already been in the business. He was a really successful W-2 person. So when he came on, he's like, all right, I have the experience. Why do I need mentorship? And I think from humbling himself and saying, I want to learn from this group. I want to be able to learn. And he's a big part of what the cowboy cohorts in Texas. I mean, there's a big group of students out there that are doing deals together. They're raising capital. I mean, I love the idea. And you'd mentioned it, that conveyor belt. That has really changed my idea on multifamily, really looking at it as leaving those skills to my children. We talk about legacy wealth and legacy skills, and what you're learning right there, you're going to leave to your kids who are in college right now. As they get older, they can understand that concept. And could you imagine if you'd learned that concept 10 or 15 years ago? Life would have been completely different. And I think that was really, really important. I think the other one, the last bullet point, I mean, everyone can read, but I think this is one of the most important for myself as well. This is the reason why I created Jake and Gino, and I give so much credit to my partner Jake. Is I had no one to hold me accountable at the restaurant, and when I started partnering with Jake, it's like, wow, I can't let him down. I've got to underwrite deals. I've got to call brokers. We've got to do property tours. I've got to underwrite deals, and all of that, and having somebody there to be able to say, I'm not letting him down. I let myself down, but I'm not going to let Jake down. And I think, Tony, if you want to speak to that accountability piece, because you're on all the Monday lessons.
Gino, I want to speak to it for a second, because even today, right, we're doing bank terms on the deal that we're working on right now.
Yeah.
I said, dude, let me just make sure we're good with these. We're not missing anything. It was a 30-second phone call, but it's like peace of mind, right? So
yes, I agree.
Yeah. Yeah. I mean, obviously I had lots of accountability when it came to my family. And as I started syndicating, I had limited partners. But once I joined the community, now I've got lots of partners that I'm working with. And of course, many students that are, observing and potentially wanting to also partner up. And so there's just a lot of awareness and visibility to what you're doing. And that kind of drives a little bit of motivation.
Mm-hmm. Well said. Love that. Let's jump in the deal.
All right, here, let me move this out of the way. Okay, so this is a deal actually we recently closed in the last 2 weeks. It's called Nexus Urban Living, 75 unit in San Antonio, Texas. It's a Class C property built in the mid 60s. We purchased it for a little over 6.8 million. We did this on a loan assumption. We can talk more about that here in a bit. We had to raise about 3.4 million for the deal, and we're planning to hold it for 5 years. CapEx on it's about 690K, which kind of interesting because, I mean, you can see just, through the photo I've got here, and I've got some other photos I'll share. There was $2.5 million of CapEx already put into this property before we bought it.
Wow.
So when you consider like having to come in and do a heavy lift to try to bring the value add in, we didn't really have to focus as much on the physical value add. It was more of an operational play.
Jake, I'm going to say something pretty obvious. San Antonio ain't Mississippi, huh? Price is a little different in San Antonio.
I want to hear about what's going into that CapEx.
Woo! What are we spending on CapEx?
Most of that CapEx is on the exteriors, just doing refresh. I know these photos here look pretty sharp. This was primarily when it was done, so it's been a little bit dated over the last 3 years since most of this work was done. So we've got some work to do around the pool. We've got some landscaping to do. We want to do a few things on the interiors with smart locks and thermostats, things like that.
You're
But
staining those handrails again, or
we'll probably refresh that.
Yeah.
Yeah, it's been a little bit faded in the sun. Some of the trim work, just had a little bit of rot that needs to be addressed. But really most of it is just kind of covering our butt, like budgeting for a certain number of HVAC units to potentially go down through our ownership, budgeting for roofs, parking lot. These are all things that, we just want to refresh and have the budget if some things need it, during the whole period.
So
And you said
their debt became an asset essentially. So you were able to assume it, and I'm sure it's pretty solid. Is I'm guessing here, yes.
We can go into that here in just a minute.
I'm getting ahead of myself. I'm sorry.
Let me just quickly mention about the team here, because like we all know, this isn't done independently. So I want to point out, just the point on the very bottom there. This team of Jake and Gino members, and there were a couple other members too. I know I saw Trevor Thompson on the phone or on the Zoom here. and Lindsay Haynes, that for those of you who are in the Texas markets, know her with Metric Property Management. This team came together at one of the Jake and Gino boot camps back in July.
Mhm.
And so for those that question whether they should be going to these boot camps, or maybe you've been to a buy right, or you've been to a finance right, and here comes another one, this thing came together in the hallway.
He just
So-
said that's where the magic happens.
It is where the magic happens.
The Bucky boys.
Mm.
That's right. Yep. So you got Ryan, Sennett, Scott and Haley, and Andy. And then I mentioned Trevor and Lindsay. We round out the GP team.
That's awesome, because Andy was at the buy right this past weekend. Senate was at the buy right this past weekend, and I saw Ryan at the last boot camp as well. Ryan joined Jake and Gino a little over a year ago, and I think he's always on his third deal, because he was in it full time. So the ability to start networking and looking at deals and being able to partner up and raise capitals has been the ability for him to transform his business as well.
Gino, you never know where you're going to end up seeing these folks after MM5. My kids almost ran them over in the lazy river, the aggressive lazy river at the Gaylord Palms. So it's like we're doing life together with these folks.
That is awesome. That's great.
Yeah, I think the most important thing for me on this is when you find team members that complement your strengths, then you can really focus on things you're passionate about.
Mhm.
And my first syndication, I did everything. When I syndicated, I didn't know what I didn't know. And I basically brought on a GP who was really only a KP. And that was just something he said is, look, I'll sign on a loan and I'll give you some credibility, but it's all you. And in a case like this, I got to focus on investor relations, raising capital. I don't necessarily want to focus on tenants, toilets, and trash. So I'll leave the operations for others. So I get to do and focus on what I do well.
That's awesome. Love that.
All right. So Jake, you asked about the loan. So this is probably becoming a little bit more of a trend lately with these loan assumptions. I don't know if every one of them would take as long as ours did, but I hear they do take a long time. And
How many days was it?
I think we got under contract on this sometime late June. I got brought into the deal in mid-July, and we closed on it at the end of November.
Wow. June, July, August.
So this was a loan assumption. And when did they get it?
So they held it for about 3 years. You can see the origination was 2019.
Got it. Okay.
And there's a little something special about that timeline. What do you think it is? It's usually when the IO burns off.
Mm-hmm.
So this seller started to feel the pinch. It's a big operational play. The seller was pretty absent.
A 3-year IO on it and it expired.
Yes.
Yeah.
Yeah. And so, everything's going hunky-dory, while you take over the property, you got all your interest only in place. But then as he started seeing principal coming his way, and not raising rents and not taking care of the place, now he's starting to feel the pinch, and that's opportunity for us.
So let's talk about the rates for a second, because I was just sure that you're going to come up with like 3.5% rate. They got it and they were just trying to roll it out and lever the debt as an asset. But guys, not too long ago, 2019, 5.1% agency deal, right? And
that's when rates ticked up, Jake. You remember that little window of
Yeah.
4 or 5 months when rates ticked up? A lot of deals went out of contract, and that was the period.
Yeah.
Rates did go up a little bit, but then what happened is they started pushing them back down because they saw that deals were just falling out. And
but it's compared to what you're getting today, there's value in that.
yes,
right?
absolutely.
So here's where the real value is, Jake, is that if, first of all, you look at the leverage at 72%, but the term. So we have 7 years left on this term. So if rates come back down, obviously, we could refi it and continue to hold it.
Mhm.
We could possibly just do a short hold on this and hold it for maybe 2 or 3 years and then sell it to another investor who wants to assume it at the same rate that we have and still be able to run it for another 4 or 5 years. Or we can hold it for the full 7 if we want to go a little longer term on it. So
Is
there's
it yield
really
yield
three
maintenance?
This is yield maintenance.
Got
Yeah.
it.
Tony, before you go to the next slide, you can put up the next slide. D Stu, do you have any more questions out there? If you want to butt in.
Oh, we've got one right now. Tony, did you have to budget for plumbing replacement or any other major repairs in plumbing?
Plumbing, not necessarily. No, we did scope the lines. There was some foundation issues on, I think, one of the buildings, but it wasn't significant enough that it was going to damage any underground plumbing. So I will say, you get into mid-60s vintage in Texas, you're likely going to have cast iron piping underground, and it is something you definitely want to scope the lines for, because it's kind of getting to that age.
Yeah.
Mhm. Love that.
I like the Seahawk green that they got working too. It's fancy. It's nice.
So a little bit on the business plan, a lot of words on this slide. I'll summarize it this way. This was an operational play, still is an operational play. We really just didn't have, or the previous ownership did not have any real presence on site, just let things kind of atrophy physically and operationally. Tenants weren't being taken care of. And so, the service basically suffered and rents stayed low in that capacity. So we do see that there's an immediate increase that we can start, attacking the market with, and just sort of organically growing the income through rent increases. But we also see that we could be doing some things around the ancillary income, things around RUBS, pet rent, valet trash, covered parking. We just have a lot of opportunity there. And we don't necessarily have to add the covered parking. We have some covered parking. They just haven't been charging for it.
Love that.
And what are you getting for covered parking?
We just took it over 2 weeks ago, so we need to kind of test that out. But normally in properties kind of in the similar area, I've seen about $25 to $35 right now, just kind of the way things are. But
Is that a fee, or is that just going to increase the rate?
that's a monthly fee on top of the rent.
Yeah.
Sometimes, I had a property recently that we didn't even put covered parking. We just started charging for reserve parking. All the spots that were closest to the entry of each of the buildings, we just put a reserve on there. We hired a towing company. They did a sticker program, cost us nothing. And we started charging $25 for every spot.
Like that.
All right, returns. So this was a syndicated deal. And by the way, you can see some more of the photos. They put
Fancy.
in, I think they over improved.
Yes.
So when you consider rents currently around $850, $875, with the potential to go up to about $1,250 on the 2 bedrooms.
And they didn't even do the thin granite. Like, that's the thick stuff. They went in nice, right?
Well, they didn't come to the buy right boot camp, that's for sure. They wouldn't have spent this much money on rehabbing a unit. And I'm just saying, sometimes
It's fancy.
you don't have to spend that much money on a C property to be able to raise rents.
Maybe they were living there, Gino.
Yeah, so we did some stress testing, of course, in our underwriting, but the way that we syndicated this was 7% preferred return, 70-30 split. We did a 50-50 after a 16% IRR hurdle. The cash on cash returns are probably somewhere around 6.6%. We did offer a little bit of a waterfall on this. We had an option where we could offer a 10% preferred return to our investors with no upside. We got a little bit of interest in that. And I bring that up because, as a syndicator, you're always hearing cash flow, cash flow, cash flow. And yet when you offer more cash flow, people are like, no, I want the equity.
That's an interesting point you bring up. It's so true, because people, and if you can get that 10% with no debt, but people always want upside. That's why they're in multifamily. They want that upside. So they don't want the 10% that's stable there, unless you have an older clientele that's just looking to coupon clip. But if you're going to be in this deal for 3, 4, or 5 years, they'd rather want to see some of that upside as well. So you bring up a great point,
But it's the trifecta too, Gino. You want the cash flow, you want the upside, you want the tax benefits.
Yes.
That's what you get. So
Yep.
Yeah. Yeah, and that's just something that we continue to learn. As much as people say cash flow is important, really, they get into multifamily investing because they're trying to grow wealth. And sure, everybody wants to quit their day job, but I mean, it's going to take a long time to get the cash flow to replace any kind of substantial income. So,
Mhm. What else we got left? Any other slides left, Tony?
just what's next for
good.
me.
All right.
We've got
So,
one other question. Do you guys want to do it now or?
Yeah. What?
Okay, cool. So Tony, since this was a motivated seller, did you get any discounts in the purchase price? And then what was the purchase cap rate for this property?
oh, good question. And I could start flipping over to the underwriting, but um, I'd have to look. I'm sorry.
If you want, just get the email or the whoever left that comment, and Tony can just we'll do Tony. We'll put your contact information at I guess it's the next slide. Before we go on to the next slide, just whoever asked that question, you can just shoot Tony that question, and he'll reach back out to you and let you know.
Absolutely. Got it right at my fingertips, just behind these slides.
So you
And
got 1,000.
someone was asking how you found it too, Tony.
This was actually found by our partner Lindsay, who manages Metric Property Management. She's
Ooh.
focused on Austin, San Antonio primarily, and so she's obviously very in tune with what's going on in the market. And I think she had a good relationship with one of the brokers, and so we were able to find this one through that
Partnership
relationship.
paying off, huh?
Yeah.
Nice.
And Tony found it at the Finance Right Boot Camp in July of this past year in Kansas City.
Yeah.
In
I
the
had a
hallway.
couple other questions too, Jake and Gino, just direct messages asking about the boot camp mentorship community. So I'll slap Scott's Calendly link in the chat box again before we hop off.
Sure.
That way, if you guys do, you can jump on with him. And then there's another question, Tony, for you. How did you find the deal?
Yeah, that was through our partner Lindsay, who had the broker relationship, being in the market with her property management company.
Okay.
So Tony, I'm going to read this what's next because I think it's pretty impressive what you've written down here. 1,000 units and plus $10 million capital raised. Grow the coaching business. I love that. 15 to 20 hours a week sustainable. I definitely see you doing that. The third was establish business development consulting and mentoring practice. And the fourth one, relocate to Utah. I remember you asking the question, should I buy the place in Utah? Should I get the short term? And I mean, that is awesome. You pulled the trigger on that. And congratulations on that. Those are really some awesome. Could you have seen yourself doing this 5 years ago?
No, I didn't even know I'd be doing some of this stuff a year ago.
It's amazing. It's an amazing Well, what do you attribute that to? I mean, is it just taking action? Is it surrounding yourself with the right people? What led you to do something that you couldn't see yourself doing 5 years ago, or even 1 year ago, and now you're doing it 1 year later?
Yeah, I mean, there's something called momentum that is real.
Yes.
And it's like, so you talk about doing deals in the hallway. My first deal after joining Jake and Gino happened in the hallway of MM4. And so I met somebody.
That's where the magic happens.
Yeah, that's right. Be in the hallway, guys. But I met somebody who invited me into a deal. I talked to my wife that weekend and I was like, should I do it? I don't know. I got to raise $1 million. I don't know if I could do it. I did it once, but was that just kind of a one and done? She's like, go for it. So I did it. I raised 1.2 million for that deal. And then within 2 months, I got my next deal. And then 2 months after that, I got my next deal. And these are all through Jake and Gino students that were coming to me with these deals. And so I think that just kind of got momentum going. It was, I was sitting there from April to July going, where the hell are the deals, man? This is taking forever. It was only 3 months, but I was getting a little spoiled by the momentum that I was getting. So I think it's just, being inspired, being surrounded by people who are doing great things every day. The coaching thing, I think just came up as I was exploring new streams of income. And I went through a little exercise, for anybody that's interested. I've talked to a few people about how I went about it. How did I determine that coaching was the way that I wanted to go and kind of be my honeybee? And number 3 here around the business development consulting and mentoring practice, that one came because I'm in this coaching program. I'm getting educated, getting certified, and 35 of my peers saw that I had experience building businesses, and they basically said, will you consult us? Will you provide professional services to help us build our businesses?
That's awesome.
So you just put yourself in a place to be successful, and good things can happen.
Can you share your contact information? And I'll end.
1 second,
Tony's-
Gino. I want to say just on that previous slide before we get going, clarity is so important, especially as an entrepreneur. If you know where you're going and you apply yourself, throughout the week, and you have very good plans, this stuff will come to fruition. And
Love
so I want to, hats off to you, because that's exactly what's happening here.
So what you're saying, Jake, is education times action equals results, and Tony's the
You
personification.
can't just wish it. You got to do the work, but that's right.
Yeah, that is awesome.